Let's be honest. Have you ever been left holding the bag from an influencer's shot call? Have you ever trusted their opinion on a project that you know nothing about? And my final question to you, where has that gotten you today? I'm broke, nigga, I'm broke! Well, with over 20,000 cryptocurrencies in the market, I really cannot blame you for falling victim to the old crypto influencer shot calls, because believe it or not, I've been down the same path and I've fallen for the exact same ones. Let's be honest, guys, in such a complicated new industry, most of us don't really have the time to go ahead and research projects or new trends, let alone trying to understand the complicated and ever-changing new lingo. Most people, I guess, probably including yourself, just want to take advantage of the
greatest transformation of motherfucking wealth in the history of the world.
Similar to the dot-com boom back in the early 2000s. Well, I 110% agree, but honestly, why does it have to be so difficult to armchair invest your way through the crypto trend and generate massive amounts of income while living your normal everyday lives, focusing on everyday things like goals and dreams of your own?
My plan is that I will be pilot and I'll help everyone.
Well, the answer is it really shouldn't be that very difficult at all. You just need to know what you're looking for, starting with Moonbeam. Welcome back to a brand new video, everyone. My name is Kyron from No BS Crypto, and if you're new around here, I would like to say welcome, and if you are a returning subscriber, thank you for sticking around and continuing to support me. Now, for those who don't know, my channel is designed to give you the most comprehensive overview of cryptocurrency projects, so you're the most informed when making investment decisions of your own. Now, on my channel, you're only ever going to see objective reviews with fundamental analysis to always back up everything I say.
But wait, there's more!
I've got a website in the making that is designed to give you an all-you-need-to-know breakdown of any cryptocurrency project, with complicated terms broken down by real developers. Fundamentals behind any project will be explained in quite a lot more detail than what I can do on this channel, and you'll have every resource available to make the best investment decisions on your own accord, saving important things like time, money, and lots of stress. Now, make sure you're subscribed with the bell icon turned on so you can be updated when the time does come. Now, in saying that, if you are a developer or an influencer looking to spread your knowledge, please go ahead and send me an email on the About tab over on my channel's homepage. Moonbeam is a cryptocurrency I hold to a very high regard. It's a project I never hesitate to tell people to take a closer look at, and I do strongly suggest those who are looking for a high return project to seriously consider. But what have we learned? Do not hold my word on that. Let's cut through the shit and review Moonbeam in the most objective way possible. Now, I'm going to cover the technicals, that is what Moonbeam actually is, some of the fundamentals that I teach in my course, and finish up with my no bullshit price prediction and obviously overview at the very end of the video. Now, I can literally see some of you sifting through the timestamps, looking for the very end of the video for that overview and price prediction. And I know because I do check my video engagement. So if that is you, I urge you to please listen to the technicals. It is so important to do so. You know, as I said at the start of my video, you've got to stop relying on the judgment of others to inform your investment decisions. And it's time to start basing your investments from actual data and understanding the actual projects yourself.
Stop it. Get some help.
And guess what? I've got Warren Buffett to back me up with that. He's the greatest investor to ever live, and he once said that you should never invest in a business you cannot understand. So, with that being said,
What the hell is Moonbeam?
well, Jimmy, to understand what Moonbeam is, I'm gonna have to explain its brief history. Moonbeam is a layer 1.5 blockchain built on Polkadot, leveraging the very powerful substrate framework. Now, it became the second ever project to win a parachain auction slot on November the 24th, 2021, when it raised a total of $258 million from over 48,000 people, cementing itself as a Polkadot community favorite. Now, the Polkadot ecosystem was officially born around a month after this, when Moonbeam launched its mainnet to become the first ever parachain to go live on Polkadot's Relay Chain, which, for those of you who don't know, is pretty much just the central chain connecting all 100 parachains and subsequent parathreads. Now, since its mainnet, Moonbeam has seen an onslaught of demand, amassing around 150 ecosystem partners in only 10 months, including many more in development, such as crypto behemoth Uniswap. Now, if you aren't familiar with Polkadot or what the hell a parachain is, then check out my video at the top right-hand corner of the screen. I really don't know which side's my right and my left on the videos. But anyway, it's up there, and go ahead and check that video out because I don't have the time in this video to explain everything I mentioned in that one.
So what does it do?
Well, to put it nice and blatantly, it's the cross-chain solution we've all been waiting for. Actually, you know what? Begging for. Moonbeam is designed to coordinate cross-chain transfers to and from any EVM-compatible blockchain over to Polkadot in the most seamless way possible. Now, it does this by acting as a foundation for decentralized applications to deploy or redeploy a smart contract in an EVM-compatible environment on Polkadot. That's quite the mouthful. Now, what this actually means is that any dApp already existing on an EVM-compatible blockchain, such as Ethereum, Cosmos, Avalanche, and more, have the ability to redeploy their smart contract onto Moonbeam to access the full Polkadot network, leveraging the benefits of the highly interoperable parachain and parathread ecosystems with quite literally zero to no code changes. It also means that building on Moonbeam offers smart contracts some really unique advantages due to the compatibility with the Polkadot substrate. So what this really means is that decentralized applications that are built with smart contracts can leverage the highly customizable framework famous to substrate, unrestricting many components bound to a smart contract, meaning that we're about to see some really, really unique dApps, basically unlike anything we've really seen before. The best way I can kind of describe this to someone who knows absolutely jack shit about what the hell I just said is imagining what you could build if Legos could bend. Not to mention toolkits such as Truffle, Waffle, and Remix, which for those of you who don't know, pretty much are used to deploy modules and plugins for smart contract customization. Basically, they're used to create smart contracts. They're actually still able to be leveraged to develop, test, and execute these contracts on Moonbeam. Now, this makes Moonbeam an ideal destination for any dApp looking to integrate with Polkadot in the easiest way possible, simultaneously opening the door for the next generation of decentralized applications. Now, as a matter of fact, it is so easy to redeploy on Moonbeam. That's all that's required for an existing dApp is to ensure the bytecode is EVM compatible, which pretty well should be a standard across most chains, definitely EVM chains. And all that's required is to compile this into Moonbeam's SDK, and you have zero to minimal changes required, and you're highly interoperable. Now, once a smart contract is redeployed over on Moonbeam, they're able to interoperate with any dApp on any network that is connected to either Polkadot's expanded ecosystem or built on Moonbeam. Yes, trust me, you understand that perfectly correct. Contracts can intercommunicate on Moonbeam to perform cross-chain transactions in accordance with their home chain. So let me give you a quick example of what I mean. A launchpad on Avalanche has a brand new project being released that is only open to the existing members of the launching project's NFT club. Now, at the same time, this Avalanche launchpad has recently redeployed its smart contract to Moonbeam, just to give you the TLDR. Now, likewise, the same NFT club, which happens to be native to the Cosmos ecosystem, has also redeployed its smart contract to Moonbeam as well. Now, acting as the intermediary, Moonbeam facilitates interaction and swaps of the tokens and NFTs to and from both networks, even though they're both on two completely different blockchains. Now, to lay that out nice and simply, decentralized applications can be built on Moonbeam as either their home chain, just like any other dApp would in any other blockchain, instantly becoming interoperable across EVM networks and the Polkadot extended universe. Now, this, of course, would be a wise choice for any dApps, old and new, that aren't already synonymous with a particular ecosystem, like you'd find with things like Uniswap or Curve with Ethereum. Now, the reason why it's a wise choice, with obvious interoperability reasons aside, is that they're now able to leverage substrate palettes with their smart contracts for far more customization. Also, just like in the example, projects like Uniswap or Curve that need their home chain to remain the same, for example, on Ethereum, can just redeploy their existing contracts on Moonbeam to connect with other dApps on different ecosystems. So not only that, Moonbeam also allows protocols to grow much larger. You see, before Moonbeam came along, if I were a protocol wanting to reach the most amount of the market as possible, I would have to redeploy a smart contract on various different blockchains. Now, this would require a lot of fiddling around with different SDKs, and ultimately my code would pretty much need to be manipulated in some way or another every single time. Now, without a token bridge, each of these contract deployments are completely separate from the next, isolated, probably pretty lonely, and effectively different markets altogether. Now, the somewhat solution would technically be a token bridge. However, if we ignore the Pandora's box of complexities that arise for the users of such bridges, we have an issue with liquidity, management, and of course, security. Basically, it ain't the solution. Now, to put it into perspective and give you all some buzzwords to look up, in this example, my protocol would have issues with things like fragmented liquidity. Well, that also technically means TVL. Now, certain features would be unavailable for different chains, and updates via DAO referendums would be virtually impossible to coordinate, and obviously much, much more. Now, for example, I may only have $1 million in TVL on my Binance Smart Chain deployment and $20 million on my Ethereum, while my Ethereum chain is on V3 and BSC is on V1. Of course, these both do technically interoperate a lot more seamless than that, but that's just a prime example of many other different layer 1 blockchains.
Would this confuse the absolute out of investors?
Yes.
Would this piss people off that are new and don't know the difference?
Yes.
Is this sustainable?
Who the hell are you kidding, Jimmy? Of course, no. As mind-boggling as this may seem, would you believe that SushiSwap, one of the largest DEXs in the entire ecosystem, has done exactly this? They have around 16 deployments of their smart contract on 16 different blockchains, and guess what? They're not talking. So this is where Moonbeam would come into the equation. For a dApp like SushiSwap, redeploying their 17th smart contract on Moonbeam would allow every single contract to interoperate, unifying the protocol and creating a seamless cross-chain communication highway, even allowing DAO referendums to update the contract at once. By doing so, you now have a way to merge liquidity pools, creating a unified TVL, maintaining the same features across all deployments, and much, much more. It's at this point, you're pretty much as if the protocol was on a single chain. The really amazing thing is, it doesn't matter if Moonbeam is used to connect multiple deployments of the same smart contract, or if it's used for cross-chain communication like in the Avalanche Cosmos example, or if it's used to send messages around the Polkadot ecosystem. Any cross-chain communication can be programmed to the push of a single button for the end user. Now that's pretty cool. Traditionally speaking, cross-chain transfers would mean bouncing between networks, dApps, liquidity pools, fee markets, finality times, and overall just a really shitty experience, especially if you compare it to Web 2. And I haven't even started on the risks. And that's one of the crucial components in the entire operation, simplifying cryptocurrency so that Web 3 becomes as easy to use as Web 2. Now you're probably thinking to yourself, yeah, this is all great, but anyone could claim these things. How the hell is this actually going to work? 2 words, connected contracts. What I'd like to do before I actually tell you what it is to give you, the viewer, just a second to verbally guess what the a connected contract may be. I'm not going to cut the video out here. I'm just going to wait for you to say it. Just guess. I'm fucking serious. Just give it a go. It's alright. It's not weird. Talk to myself all the time. Thank you, fucking weirdo. A connected contract is what Moonbeam refers to as a smart contract that is connected to other smart contracts. So if you got that correct, then congratulations, you can read between the lines. And if not, well, you honestly just haven't watched enough of my channel. Anyway, as we've already spoken about, connected contracts allow Moonbeam to talk with any dApp on any blockchain, so long as they have a connection with Polkadot or have their smart contract redeployed onto Moonbeam. Now, connected contracts are powered by general message passing, a breakthrough brought to us by XCM and a few other third-party platforms that have partnered with Moonbeam like Nomad and Axelar. For those of you who don't know, XCM is Polkadot's groundbreaking cross-consensus messaging protocol that uses 2 types of message passing. The first is vertical message passing to connect to the relay chain to and from its parachains. And there's also cross-chain message passing to allow parachains to connect directly to one another. Now, if you're wondering, as you can see on screen, some of the benefits of the XCM protocol can be seen here. Now, the data sent in XCM messages are actually computer programs rather than just an execution demand. Now, this is huge in the way of cross-chain programmability, as completely different blockchains can now talk comprehensively. Not only that, but XCM connects to different consensus mechanisms, allowing for a proof-of-work network like Bitcoin to connect to a proof-of-stake one like Elrond. Now, the list does go on, and I really don't have the time to discuss as much as I honestly would like to. So if you aren't happy with what I've mentioned, then feel free to read it from Polkadot yourself. The link will be in the description. And actually, now that I think of it, Moonbeam does a pretty good job of explaining it as well. The link will be just below it. As I mentioned, there is also Nomad and XLR, which are more or less the exact same as Polkadot's XCM. However, allow Moonbeam to interact with chains outside of the Polkadot network. Now, I'm not too sure how well you can tell, but I personally am super excited for the future of Moonbeam and general message passing technology as a whole. It's a brand new technology, so expect reviews on Nomad and XLR very, very soon. Now, before we conclude the technicals, I'm gonna do a really dodgy thing here and throw Moonbeam's consensus algorithm in just very, very briefly. What's that? Why? Was that why? Because I fucking can. I'm just pulling your leg. It's pretty much because it's the same in every other parachain except when it comes down to block production. So, matter of fact, I'm going to be your annoying teacher back in school and give you a little bit of homework. I want you to read this article on the algorithm, and I seriously suggest you go ahead and listen to my advice and go and look at that. You'll actually learn a crucial component of not just Moonbeam, but how a relay chain runs validators. Anyway, so to pretty much give you what you're looking for, the consensus framework is called Nimbus.
Mr. Nimbus! Who is that? My fucking nemesis, okay?
It's a hybrid model that combines stake-based ranking to identify who will be the next block producer with another layer that narrows down the number of collators to a subset of each slot. Basically, it's just a spin-off from proof of stake with some differences that come from the rules of being a parachain. Either way, that's really all you need to know in regards to the technicals. All right, so it's time for my favorite part of the video. Let's check out the fundamental details. As you can see on screen, these are my project vetting fundamentals that I like to go over in my course. Now, quite obviously, there is a ton to cover, so I'm just going to pick and choose what I believe is the most important information. And first up, we have a standard in fundamental analysis, and that is the token. Now, Moonbeam's token is called GLMR. The ticker is GLMR, obviously for Glimmer. Now, it's a typical utility token you'd find in most networks, playing a vital component in the function of the network as it is used for gas metering, protocol security, governance, and transaction fees. So let's expand on each topic very briefly. So first of all, gas metering is specific for smart contract execution, as obviously smart contracts need to pay to use the network. Protocol security seems to be a pretty important part of Web3. So obviously paying the collators that create the blocks for the network is apparently a pretty vital component. Now, the governance is also key, as this is what drives the protocol forward. Now, the token in this case represents the election of the council members, voting, and proposals. And lastly, we have transaction fees, which is pretty self-explanatory, but just to explain it, it simply means paying for transactions in the GLMR token, just like you would anywhere else in any other gas metering blockchain. The interesting aspect is that Moonbeam actually burns approximately 80% of every single transaction fee, and 20% goes into the treasury. This leads right into our next topic, which is the tokenomics and inflation rate. The token distribution is quite simple to follow, as Moonbeam has kindly supplied a description for each allocation. So I'm going to save you the time going through each one. What I will do instead is point out what I like to call third parties, or those who have access to the tokens and have the ability to dump them at the drop of a hat. The main suspects typically are 1, the venture capitalists, obviously, 2 is the team, 3 is the advisors, and 4, the community through bonding events and other early investment rounds. Now, taking a closer look at Moonbeam's distribution and vesting, we'll need to do some grouping here. First of all, the VCs control a total of about 26% between the seed and strategic rounds, as seen here. Now, the seed round would have access to the cheapest possible price per token, being the very, very early investors in the protocol back in late 2020. Now, these guys began receiving their tokens from around March 2022, and their tokens will be linearly vested each month right up until late 2023, meaning they will have all of their tokens come mid-2024 bull market. The strategic round was completed in March of 2021, and investors began receiving their tokens around February 2022. They are linearly vested every month until February 2023, which means they will have all of their tokens come the 2024 bull market as well. Moonbeam's investors include some of the very best in the crypto VC sphere, with the likes of Binance, KR1, Hashkey, D1, GBV, IOSG, Arrington, and Fembushi, just to name the best of the bunch. Now, these are obviously spread across both rounds, but considering all parties will pretty much have their tokens come the next bull market, I really don't think it's a matter of quality and sell-offs, as they all know of Moonbeam's potential. It would be silly as well, not to mention the little teeny tiny 1.4% given to the pure stake early investors as well, because these guys are the backers of Moonbeam's creators, a company called Pure Stake, that have also worked directly with the likes of Algorand and Polkadot and created Moonbeam sisternet that many of you should probably know of, Moonriver. Now, these backers began receiving their tokens as of June 2022 and will receive tokens on a linear monthly vest as well, right up until their tokens are fully unlocked come December of 2023. And next, we have the team. Now, I personally always like to ensure the team has the longest lockups, as this generally shows long-term commitment to the protocol. Now, we're going to have to group this yet again, as Moonbeam has done a fantastic job of separating future incentives from the original team. Now, the total quantity comes to about 14.6%. However, the most important of the two, at least for us right now, is the founders and early employees. Now, these guys have access to 10% of the total supply and will begin receiving their tokens around December of 2022 with linear monthly unlocks until they receive their full quantity of tokens all the way in 2025. Now, if you ask me, this is fantastic, as it shows the team isn't just in the game for a large payday. Now, they're pretty much here for the long haul, or basically not at all. And for those of you who are wondering, they obviously need to pay employees, which is why they still need to vest their tokens on a monthly linear basis. And the future employee incentives is only 4.6% with the exact same lockup and vesting proponents. And now for the advisors, or as Moonbeam has grouped it, the key partners and advisors. Now, these guys have a total of 3.9%, with the advisors having their tokens cliffed on June 2022 and equally unlocked on a monthly basis until December of 2023. We also have strategic partners and seed partners with very, very similar unlocks, but I'm not going to bore you with the details, and just let you know they have access to all of their tokens come December of 2022 and December of 2023 respectively. And last, but emotionally and temperamentally definitely not least, the community rounds. These are both the Take Flight community event and the 2021 Moonbeam crowdloan rounds, accumulating around 24.8% in total. Now, the Take Flight event was a total of 9.8% and was completed in September of 2021. So these guys are nice and easy, as they were only subject to a 40-day cliff, which is when they received all of their tokens. Now, those who participated were lucky enough to grab their tokens at 25 cents a pop, and were prohibited from spending over $2,500 each. Now, this round was Moonbeam's thank you round, I guess you could say, to early supporters of the project, which makes sense, and I just missed out, which is a bit unfortunate. Now, the crowdloan, on the other hand, was an interesting one, and this was originally capped at 10% and later converted to 15% as more contributors rolled in and basically Moonbeam shut themselves. Now, I say it's interesting because Moonbeam didn't cap the contribution amount per investor. Now, this meant that the contributors' GLMR dot ratios were pretty much dramatically reduced with the more people that bonded their dot. I made videos at the time urging those who wanted a decent ROI to not bother about bonding and wait until, well, I guess you could say right until now to invest. Of course, as expected, many didn't listen and ended up with a 4 GLMR to 1 dot ratio. Now, to be honest, it's not as bad as what you might think, because at the end of the day, the users still get their dot back after the slot ends, which was pretty much the end of 2023. But still, buying at 50 cents is still a hell of a lot better than technically buying at $12.50. Now, by all means, guys, please don't misconstrue what I'm saying here. I'm not here to say I told you so or throw shade at anyone. A lot of you guys I know did get in, and that's absolutely fine. Hindsight is an absolute bitch in life, so I don't want anyone beating themselves up over it. If anything, think of it like this. You very well might have put all that money into Luna hadn't you bonded your dot, so as a matter of fact, pat yourself on the f***ing back. I know, at least for me, we're all waiting for the parachain auctions for quite a long time, and I think when they ended up coming up, we got blinded by the fact that they were finally here and we could finally invest. However, with that being said, I'm still going to shamelessly plug my predictions like an absolute lemon. While the crowdloans were happening, I posted a video where I stated I was looking for a ratio anywhere between 150 to 300 GLMR for every 1 dot, but I was predicting anywhere from 5 to 40 to 1 dot ratio. By the look of it as well, I obviously wasn't that far off predicting the blow off top and also the steady price prediction either. I just guess I'm... All right, I've gotten a bit off topic here. The crowd loan participants would have received 30% of their tokens come December last year, and 70% will be released on a linear block by block basis over the course of the lease, which ends in July of 2023. Now, that just about does it for the token distribution, vesting, and investors. Obviously, there's still a lot more to discuss in regards to the remaining distribution. However, these are all ecosystem based. The main goal was to draw those third parties I explained earlier into your head. Now, with that in mind, I can safely say I would expect Moonbeam to be fine over the course of the bear market. And what I mean by that is I don't believe any one collective would have any good reason to dump their tokens when the price is so close to being at those flight and seed levels. I think we can safely say that almost all retail investors, let alone VCs, are going to plan on holding until the next bull market, unless a few economic variables come into play. One of the big ones is the energy crisis over in Europe. Now, if utilities plan to get any worse come early next year, it wouldn't honestly surprise me to see the smaller VCs and retail investors that may still be in a 2x ROI just sell their positions and pay for the bills. Now, this obviously wouldn't affect just Moonbeam though, and we'd see something like this ripple throughout the entire market and probably create some really amazing buying opportunities for those of us who have extra cash on the side. Now, with that being said, a majority of the token holders I mentioned won't have all their tokens unlocked at that time, which would be a benefit, but I guess it really depends how you look at the situation. If you ask me, as I said, I have capital on the side and I welcome lower prices because I'm ready to deploy that whenever something like that happens. With all that being said, the inflation rate for Moonbeam is at 5%, which isn't that bad at all.
5% mentality basically is a person that's willing to do whatever it takes.
The first reason is because an inflation rate in a POS ecosystem is important, if not crucial. Think about it like this. If the supply was deflationary or it was fixed and it was all of a sudden consumed by everyone owns a single token, who the hell is going to pay the collators to produce blocks? But Moonbeam does a great job and they actually go on to stipulate where these percentages are actually going. They say that 1% will be going to these collators to pay for, obviously, the block production. 1.5% is going to the parachain bond reserves, which accumulates the funds to pay for the parachain slot in perpetuity. And the remaining 2.5% goes to reward the users who delegate to the collators. So, as you can tell, it isn't that bad at all. It makes perfect sense to have an inflation rate for these reasons. And it's actually justified because remember that 80% of the transaction fees are burned, which is quite good considering the incredible amount of traffic that will be on Moonbeam in the coming few years. Now, I would assume this would surely cover most, if not all, of the inflation rate at some stage. Moving on now to briefly look at Moonbeam's stats on CoinMarketCap, you'll notice she's sitting quite comfortably around the 50-cent range, with a market cap of about $180 million. Now, the trading volume is a very healthy 9.5 million, considering the wider market is looking quite bearish at the moment, at least at the time of recording. Now, the total supply of GLMR tokens at launch was 1 billion, with only around 7% being in circulation at launch. This would, for those of you who don't know, explain the reason why the huge dump in price happened to $15 at its launch. Now, if we take a closer look at the current circulating supply, you'll notice that we have more or less 360 million tokens currently in circulation, which means we have quite a serious dilution within the next 15 months. What I would say is that a large majority of the tokens will end up being in circulation by or before December of 2023, all in the hands of third parties except the team. Now, we can expect around 400 million more tokens in circulation from just the 2 funding rounds and the crowd loan combined, not even including inflation. Now, this would take the circulating supply to somewhere around 750 million, basically doubling from where we are right now. And if you wanted to factor in inflation, it would mean an additional 100 million tokens on top of that, taking the total circulating supply to a ballpark figure of 850 or so million, probably just below that, by December of 2023. Now, if you're not convinced, the vesting chart verifies this by showing that around 70% of the distribution will be in circulation by October of 2023, and obviously factor in a couple more months, add about 100 million more tokens from inflation, and there you have about the 800 million circulating supply figure. Yes, all in time for the 2024 bull market.
Fuck
Now, if you want proof inflation is in effect, the total supply is a perfect example of that. Since the total supply was always ever going to be 1 billion as stipulated by the token distribution, any value added on top of that total supply represents new tokens in circulation, aka inflation. Now, obviously minus the tokens that have been burnt as well. This means that about 33 million GLMR tokens have been created since the token launch in January of 2022, minus those burnt from the few transaction fees. Now, this is probably quite scary to a lot of you, I can understand. You know, to think that it's going to take a hell of a lot more capital to get the token moving in around 15 more months is unsettling for those wanting that magic, $50 GLMR token come with 2024 bull market. But what this really represents is more of a long-term play. Since most of the tokens are well and truly in circulation by 2024 and they're in a steady increase until all of the initial tokens are in circulation come 2025, we are really looking towards the next 6 years for that 100x, if at least you are looking for a 100x. Since Moonbeam is completely dependent on network adoption, which I believe they will undoubtedly obtain, a long-term view is probably a deflationary one. Consider that a transaction fee is averaged around 0.02 GLMR. In reality, actually, it's more likely between 0.01 or 0.03, but let's just average out here. If we teleported to 2025 when the entire initial distribution was in circulation, it would take the network around 2.5 billion transactions per year to match the rate of inflation. And then obviously anything past that is deflationary. Now, I haven't actually added in that 80% of the transactions are being burnt, not a whole 100%. So you can probably throw in a couple more 100. However, I more or less see the money being sent back into the treasury as more or less being burnt in a way, because that's really just going back into the ecosystem and it shouldn't really be spent because it's probably going to be going to ecosystem grants. Now, as the current transactions have just ticked over to 10 million in only 8 months, we can estimate that the end of the year we'll see around 15 million transactions. Now, why have I said that? Well, this would mean that they would need to see approximately an adoption increase by about 166x to reach the top of the bell curve to then becoming deflationary. Now, this may come as a bit of a shock considering we're all primed to believe crypto is supposed to make you rich yesterday, but this is what an armchair investor would be looking at. When you think about it, 6 years really isn't that long for a potential 100x, and honestly, that could even be obtained come 2024 if the prices drop low enough this year. And finally, I wanted to briefly touch on the ecosystem. As I mentioned at the beginning of the video, Moonbeam already has a promising ecosystem growing, and it's only been 10 months since mainnet and around 8 months since the protocol began functioning. A great indicator of a growing ecosystem is always the layer 1 flywheel. Now, for those of you who don't know what that is, it's a flywheel that shows the natural progression of a layer 1 blockchain with the major components that go into sustaining it for the very, very long term. Now, if we take a closer look, everything seems to be working perfectly at every single checkpoint. First of all, the founders and the starting team, they've created a successful meme as a smart contract platform of choice on the Polkadot ecosystem, and later on, merging into more of the interoperable network that we now know Moonbeam of. Now, thanks to XCM and other general message passing developments, Moonbeam is solving one of, if not the biggest issue in crypto space right now, and that is interoperability. And that's quite the meme if you ask me. The investors as well, they're some of the very best in the space, raising $6 million in the VC rounds alone, creating the initial token value. Next, we have miners and validators, or in this instance, the collators, who are incentivized to join as the token begins to accrue some sort of value. Next, the third-party developers join as the network and platform can now be built upon. Now, these are the almost 150 dApps that we've already seen built upon or building on the network, and strategic XCMP connections like the 9 you can see on screen now. Now, this will be incentivized by both the meme and the value of the token, creating a type of snowball effect as the more inter-parachain or para-threaded connections and also dApps that join the network, the more that will subsequently want to join. Now, to blast us into the stratosphere, Moonbeam partnered with Arrington XRP, which is one of those VCs I mentioned earlier, to create a $100 million ecosystem funding round designed to incentivize developers to build and join the network. And that's pretty bullish if you ask me. And to complete the full circle, once dApps begin to pop up on the network, useful applications can obviously be created to provide end users the utility they also need. In return, the community grows, which strengthens the entire operation. And it's also great to see the community is already there and they're quite strong. Moonbeam has garnered over 280,000 followers on Twitter and has a decent engagement for the current time. Not to mention the belief in the network because of the large amount of DOT that was obviously contributed at the end of the last year for the parachain auctions. Overall, the ecosystem is going really strong and I have high hopes coming into the next bull market. It will be completely dependent on how many projects adopt Moonbeam, but I mean, come on, who the hell wouldn't want to? And now for my final opinion on Moonbeam and price prediction for 2024/2025. Moonbeam is a fantastic project, and I think by now you'd probably already know that. If it wasn't obvious enough, I think that they're solving a very, very crucial mass adoption inhibitor that is both interoperability and unlocking a whole host of new dApp possibilities. Since the spark of the Polkadot network, we now have a plethora of new and exciting blockchains and their own ecosystems to connect with. Now, take the XCMP partnerships with Akala, Parallel Finance, Interlay, and Latentry as examples of how various types of industries can merge into one synergistic super system. Now, I might even plan on doing a video on the capabilities something like this can bring to crypto. You can imagine Polkadot like a biome of endless possibilities, and Moonbeam allows the entire crypto community to not only leverage this, but also connect everyone together as well. One thing I would all urge you to consider is Moonbeam's main competitor, Aster. Now, Aster Network and Moonbeam have opened both ends of the XCMP gateway, which does mean they are cooperating. However, Aster, more or less, is the equivalent of Moonbeam, except obviously different in a few separate categories. Now, since this video has obviously gone on for way too long, I'm going to save the battle for a future video, but it is safe to say I do like Aster as well. But in my opinion, I do see Moonbeam winning the interoperability aspect of the battle. And according to my recent poll on Twitter, you guys do as well. Now, there's a hell of a lot more to talk about here, but for the sake of brevity, I'll leave it there and continue my fundamental analysis on my website when it's all up there. Now, my price prediction going into the 2024 bull market would see Moonbeam around the $15 mark. But obviously take that with a grain of salt. Moonbeam could very, very quickly gain huge amounts of adoption and pretty much blast that number as high as $25 or more. Now, likewise, anything is possible. And as we've seen with the 2021 bull market, things don't move in the same way as they did in previous cycles. So who really does know? Either way though, long term, I would say Moonbeam could go well above $50 in the next 6 years and is a project I'm willing to speculate on. And that will do it for this video, guys. I really do appreciate you sticking right to the very, very end. The support means a lot, and a lot does go into these videos, so I really do appreciate hitting the subscribe button and the bell icon if you enjoy the content. With that being said, I'll see you next week, guys. Thanks a lot.